Simple is designed to be a replacement for our customers' bank accounts. Simple customers get, the Simple card, they pay their bills, they use our ATMs, do all the sort of things you do typically with your regular checking and savings account. But we couple this with this really phenomenal web application and mobile application and a very personalized level of customer service. And we do all of this to help customers better understand and control their finances. So first thing, we're not actually a bank. What we do is we work with partner banks who typically have smaller teams, and we take our customers' deposits, place them in fully FDIC insured accounts here in America, which means that the money is fully insured, but we take care of the customer experience. We think customer experience at banks is a pretty low bar that you could do better than. There was a big wave of deregulation that occurred in the 1970s, and because of that there was a consolidation in the industry, and there was also a shift in business model. And what happened very quickly with this new environment is that banks started making more money from fees and charges than they did from banking. And the light bulb realization for us at Simple was that that means that fundamentally banks in America are making money by keeping customers confused. Most people sort of get their statement at the end of the month, they hold it up and they kind of squint at it because they don't really want to know, but they know that they should know what's going on with their finances. And they feel this sort of guilt and trepidation and anxiety around money because they know that if they don't do it right, the bank is going to charge them that overdraft fee, that late payment fee. And they feel that they should be better than this. We take a very different model. We never want to profit from customer confusion, which means we never profit from fees. It means we don't have fees like overdraft fees and things like that. And we then go a step further because we don't have that incentive to make money from customers not understanding their finances. We want to provide you with a suite of tools that helps you understand. So one of the big things for us is that we have the only sort of real-time processing system. And why that's important to us is it means that I can swipe my Simple card and within seconds my smartphone knows about that transaction. So I can get a connection between how I spend my money and what the impact of that transaction is on my personal financial goals. So I can get that awareness and that connectedness to my finances that most people just try to avoid actually having. And we see that leads to fairly significant behavioural changes. People are now able to save up for things that they really weren't able to do in the past. One of the core things that we do that's very different to other banks is we show you the first thing that you see when you log in, either on the web or on the phone. We show you something called the safe to spend balance. That is, how much money can I safely spend today without negatively impacting my savings goals? By showing you that number instead of your ledger balance, which is more of an accounting construct, it leads to significant behavioural changes. It's just doing one little thing in terms of design. You can press one button, you can see your ledger balance, or on the web, you can see it right there. But making the safe to spend balance larger and easier to read, that's how people live their financial lives. We knew that there were problems. We knew that I had my frustrations, and we suspected that other people were frustrated as well. So we spent a year really focused on sort of pre-customer developments. And what we found is that most finance brands don't ask their customers honestly how they feel. And if you approach it with that level of honesty, you get answers that are really phenomenally deep. And we end up getting tens of thousands of answers from customers, and we were able to build a map of what we wanted to do and how we wanted to get there. So coming out of that with things like safe to spend and goals, and the fact that mobile had to be critical and had to be real time and all those sorts of things. And what we've seen since sort of the internet age going forward is that technology driven companies are going further and further up the value chain, and they're taking not only the technology but the approach of a startup, the approach of a technology firm, which is always at its best customer-centric. We have a very active Twitter feed, and if you compare sort of how we talk on Twitter versus other large banks, we actually speak like people. It doesn't sound that crazy, but if you compare, having a real conversation actually builds sort of this idea that we call slack in the brand, and that's something where we want to have that real human relationship. If you're a certain type of business or a certain type of customer, it's really hard for you to get access to financing because you don't fit the traditional models. For example, restaurants have a horrible time trying to finance their working capital because restaurants are seen as businesses that are hard to finance from banks. There are companies like On Deck Capital, there's Prosper, Lending Club, Zopa, a bunch of companies that are doing this peer-to-peer lending thing where you can use more data and the crowd to underwrite different risks that banks typically couldn't do. And so that's sort of on the flip side to the business that we do. We're more on the deposit gathering side. There's a lot of interesting things happening on the lending side as well, where data and the crowd are breaking out of the banking model.
How is technology changing your world? Join the conversation at tdo.org/pull.